Hello, welcome to another of our Expert Insight podcasts. And this time we're talking to Kris Oxtal. Our theme today is the single family rental market. I've read the report for the Q2, Kris, and I'm very interested in some of the points you make. I don't want to overanalyze what you said, but there's a contradiction I noticed that given that the single family rental section thrives on the fact there's a housing shortage across the USA, that's contradicted by the fact that rental growth is not keeping pace, and some of the investors, you use the word, are sidelined, waiting for perhaps better indicators. Would you like to comment on that?
Yeah, of course, Steve. Great question too. I think one thing we're seeing and operators are seeing is there's a little bit of burnout from the renters and what, they can pay and the increases that they've had over the past 4 years. I think there's just a little bit of a pushback happening there. Rent growth is still 5%, so it's not nothing, but I do think there's a certain price point where renters start pushing back and when they're looking at the cost to own.
Yeah, and that flows over into deal flow. Investment deals are muted at the moment, would you say?
Yeah, transactions are definitely down. In the high interest rate environment, investors want a certain return and they need to make the deals work. There's also owners that are willing to pay more than what an investor is willing to pay as well. So there's dynamic going on there.
Yeah. And I'm interested in the supply line for investors. You talk about acquisitions being part of a supply chain and some creative ways of building to rent or having a in-house development program. So the actual investors are not slowing in their ways they fill their pipeline.
Exactly. Yeah. So, Invitation Homes, they've partnered with some home builders and they're looking to do some more build to rent and take that inventory from the home builders' hands, where American Homes for Rent, they've always had a development in-house program. And they're one of the larger developers across the nation now. They're looking at what we can buy from home builders or what we can build, through our program and the land that we have under contract. And they're finding better yields and returns that way. So American Homes for Rent, going in that direction instead of acquisitions, they're developing, and they feel that's a better use of capital to their shareholders.
Yeah, I'm sure they're constantly working on operating efficiencies, including operating expenses. Can you comment on the way they're pruning operating expenses and how is this possible in an inflationary environment?
Yep. Another great question. And, the difficulty with expenses right now is taxes and insurance there's still pressure there, especially on the tax side. Insurance year over year has gotten a little bit better, flat to marginal increases. And then we've also heard of some operators actually having some decreases in their latest quotes, which is good news because that was causing a lot of upward pressure last year. Where we're seeing the real operation expense management is on controllable expenses, repairs and maintenance, unit turnover, and really the name of the game there is scale. So what these operators have is large scale. They own a couple thousand homes in the markets that they operate in. And that allows you to put together maintenance teams and really lower the cost of some of those controllable expenses. And then the other big thing is turnover is low. So they're renewing tenants, they're keeping tenants in there, their length of stay is increasing. So, instead of a year or two, they're looking at 3 to 4 years in some markets. And so now you're having less maintenance as those tenants turn.
Yeah, so there's definitely economies of scale for the big operators. And you would think it's a very strong sector, but as you say, they have to navigate headwinds in the economic cycles. So what about the future? Are we looking at strength in the midterm?
Yeah, I wanted to say that the sectors and any downward spiral still performing really strong. 5% rent growth is still a happy place to be. It's just not the 9% that they got for a few years. That was, a little bit of a bonus. I think in the future, we'll continue to see the build for rent sector take off. I think it's filling the affordability issue. There's a lot of capital looking to continue into the build to rent space. It's just deals have to pencil. With the Fed cutting rates 50 basis points, hopefully they cut a little bit more throughout the next 12 months, and more deals will pencil as interest rates come down.
Yeah, well, we all basked in a very prosperous decade, and in the last couple of years, we've had a bit of a reality check, including in the single-family rental market. So thanks for sharing those views, and perhaps in the next quarter, we'll be able to get back on and discuss changes.
Thanks, Steve. It's always great being here.